Noon, everybody. Good afternoon, traders. How's it hanging? What's today? Wednesday? Wednesday, November the 5th. Wednesday, November the 5th. I am an associate member of T3 Trading Group, which is an SEC broker-dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure should be the same as yesterday. I'm just looking at it. It's not listing okay. Oh, no. No. It's all there. It's all there. All right. Yep. Same as yesterday. All right. So let's review it. Interesting. Not really. I was about to say it was an interesting trading session. It really wasn't. Spies closed up 0.3%. We actually had a really strong day, but we rolled down hard in the last 30 minutes. Qs finished up 0.5%. Same deal. They were up a full percentage point at a certain point today, closed up 0.5%. The IWM did close up 1.5%. That's probably healthy. This sector needed a bounce. That short-term composite that we like to look at, which is a little bit more representative of like the average stock that's out there, as opposed to the short-term tactical that we look at, which is representative of more like the market cap weighted S&P and Nasdaq. The first one was really kind of signaling a shorter term buy signal. So seeing a bounce back in the IWM, I think it makes sense. It helps to satisfy a little bit of the downside extension, a little bit of that composite, I'm sure. The RSP was up 0.8%, so more than the S&P was. So it was a better breadth day within the confines of our bounce back, which I would actually describe as like healthy and needed, and not necessarily something that's going to translate into broader bullishness. But we can circle back to that when we look at the charts. TLT got hit again today. Interest rates up. The dollar, I guess the dollar was flattish. It was up a little bit more when we were doing the morning meeting, but the dollar overall squeezing higher, potentially presenting some problems. What else? Gold had a decent day today. Bitcoin had a bounce back day from getting wrecked, up 3%. Ethereum finished up 7%. Solana finished up 6%. All right, let's have a look-see at some of these charts. So again, just while I have the 5-minute chart up, you can see we had like a flat-ish open this morning, but we had a really strong trading session for the most part through midday. Went sideways from noon to 3:15, and then we rolled down into the close. So at the end of the day here, we're left with an unconvincing candle, honestly. So the game plan in the morning meeting for me was to take a little bit more of a less is more approach. I don't have as strong of conviction in this area as I did like a few days ago when I was really looking for the pullback, right? If you guys remember, on Wednesday the 30th, exactly a week ago, I had really strong conviction in a pullback for this market. That got thwarted a little bit. We closed on lows on that Wednesday, but it got thwarted a little bit Wednesday night when Amazon reported a phenomenal report and traded higher and helped to bolster the whole market. And then obviously the day after that, you had the Amazon OpenAI news that helped to bolster the market again. But underneath the surface of good news saving the market of these individual stocks and these AI stocks, there was still broad weakness, I thought, in the actual trading sessions that day. Then Monday we kind of had a little bit of a gap and go to the downside. That gap and go to the downside brings us into really important support. 674. 674, really important support, confirmed by the 21 EMA. That's the spot that we're watching. So for me, my kind of general thought process that we've discussed, like when we were looking at that JP Morgan note yesterday, is kind of lower before higher now, which is weird to say because we had just been looking for higher before lower. We got that. We got the kind of parabolic move higher that brought us back down a little bit. And I'm still looking for a little bit lower here within the confines of some of the weakness that we've been seeing. At the same time, I'm really trying to respect November seasonality, the underlying bid, the corporate buyback bid that seems to be increasing. I think it's going to be hard to get like a major sell-off in November, December. But you're seeing a ton of large order bearish option flow that's been coming in. I think we saw some like December puts that were going off today on some size. It's been pretty consistent. So there are some players out there that are positioning themselves for not a strong November, December period. But it's just really hard, in my opinion, to battle that seasonality. So it's like, on the one hand, I want to be long, but I don't want to be long yet because of some of the things that we've pointed out that should make this market be able to pull back. So when we're coming into a support level like we were this morning, I want to be patient. I'm not really ready to be a heavy buyer off this 674 support at this point, but this is not where I want to be pressing to the short side. In a market that has barely lost a single support level since we bottomed back in April, I don't want to be pressing short into a major support level. If I see that we can lose that support, we can get below and lose 674, then I might feel more comfortable pressing a little bit further on the downside. So for me, what that just meant was I'm going to have kind of a wait and see approach for today. And if we could close above 680, that's the number that we discussed, then I have to take a big step back on even having a bearish thought process. And maybe I was wrong and 674 was the dip and I should have been buying more aggressively and I just didn't because I thought it was too shallow, and it just kind of is what it is. So at a certain point intraday today, we did trade above that 680, but with the roll down to the close, we closed beneath it. So we're sitting between the 8 and 21 EMA. The shorter term levels I'm paying attention to, again, are 674 and 680. Below 674, I think that we become, I still wouldn't say bearish. I would say neutral. I think if you get us back below 665, we might be looking a little bit more bearish. But below 674, we go from bullish to neutral. Back above 680, we go back into full-on bullishness. So those are the near-term levels that I'm watching. And at the end of the day today, it was not an inside day. We actually broke both yesterday's low and yesterday's high. But it felt like it had some inside day-ish type of feel to it, where I know that there was a decent range there, but it felt like a little bit of a range-bound session, especially with how we rolled down into the close. So just know your shorter-term key levels for the market, and we will watch those. The Qs, it's pretty much the same deal here. The bigger Q level's a little bit further down. It's like 613.50. 21 EMA is up at 616.41. So, you know, that's kind of the zone between the 21 EMA and 613.50. But Q's pretty much given us the exact same thing. And it's just impressive, some of this stuff. How well, honestly, a lot of it holds in when you consider those 4.5 points that we keep talking about. And then that headline that hit today, I thought was really mind-blowing on, like, OpenAI potentially looking for a government backstop on their AI spending or whatever is just kind of bogus to me. You know, it's just not how we operate. And for me, if I was an AI investor, that would not be the conviction that I'm looking for to stay long AI when everybody's already talking about being in a bubble, that this company that has $1.5 trillion in commitments to other companies that it can't afford to be able to do is going to ask the U.S. government for a backstop. I mean, that's just insane. And then we got this headline that came out from Jensen Huang into the close, which is also a crazy headline, where he, I don't have the exact language in front of me, I could try to scroll up and find it, where he basically said that he expects that the United States is going to lose the AI war to China. Also another comment that, in my opinion, just does not instill confidence in the AI trade. And as we know, it's the AI trade is the entire stock market, it's the entire economy right now. So just a couple really, really concerning headlines that came out today, in my opinion, that further go towards the chat that we've already been happening about Oracle and Meta and their CapEx spend and the bonds that are coming out on here now. Yet the market itself continues to hold in, and it continues to be a really difficult time to be short. You know, if it wasn't for this bullish seasonality and the corporate buyback bid and just my understanding of how and why November bullish seasonality occurs, especially in markets where it's already up, You have a market that's already up. I don't know if anybody watched that Jem Carson video that I posted yesterday in the VTF with Ben Kahn. Ben Kahn's actually, a trader here on our team. He doesn't really communicate very much in the VTF, but you might see him pop in every once in a while. He kind of does this like comical finance related podcast that's got like a ton of followers, and he gets Jem on there a lot. But like Jem basically went through in that video at a certain point just how the mechanism works for when you're in an up year, all of like the extra collateral that kind of becomes available at the beginning of the new year, and the impact that it has onto the stock market, especially because it gets front run in November and December, and you get the corporate buyback bid that's ongoing at the same time, on just why it's so difficult to be short in November, and why we've had 20 of the past 21 Novembers be positive. So it's really hard, because if it wasn't for this, like seasonality, for anybody here who's newer on the team, for most of my career I was not a believer in seasonality at all whatsoever. My constant comment and rebuttal was, just because something happened in the past doesn't mean that it has to happen in the future. And I kind of always viewed it honestly as like random, but you put enough randomness together, the statistics are going to work out where there's strong months and there's weak months, and this just happens to be November 1. It tends to be strong, but it doesn't have to be that way. And then I learned about flow of funds and market dynamics, and I learned that some of these months, November being a strong example, the reason why seasonality exists is because of market dynamics that have to take place in certain periods of the year. Like, for example, we just here at the end of October had the mutual fund year end that has some impact on the market and some individual stocks, especially with tax selling and things like that into October. That's a consistent, that's just a requirement that these companies have to do certain things into their end of the year. And November, it's kind of the same thing. It's a combination of massive corporate buyback bid that's coming on, and they're the biggest buyer in the entire stock market is the corporate buybacks themselves, and especially this concept of when you're already having an up year, all this extra collateral that gets unleashed to the market that gets front run, that creates an additional forced bid, basically from the beginning of November through the middle of January. So I would definitely recommend checking out that video if you haven't watched it already. I think that Jem is like one of the OGs on understanding market structure. So the bottom line is, like, I don't know, guys. I'm looking at these 4.5 points that we keep talking about. I'm looking at what I consider to be a further deterioration of the AI trade. I think that the economy is doing poor. I mean, look at DoorDash. Here's another one that I think is a little bit more gauged towards that middle income person. They just got smoked here after hours. You're seeing it in Kava. You're seeing it in Chipotle. You're seeing it in the numbers. Tariffs are having a huge impact, I think, on those middle income people. The jobs market's declining. I know people that are losing their jobs who are really qualified people, and they're struggling to get jobs elsewhere. And all this stuff is coming together, but the stock market's at all-time highs, so you still have the wealth effect, and the wealth effect is huge. But the stock market's only up here because of OpenAI, and because of their $1.5 trillion in commitments, and because, just when the market looks like it's going to go down, like last Wednesday, you're getting the next Amazon OpenAI deal that bolsters a huge market cap company higher that brings the entire stock market up. And then you're getting these headlines today about OpenAI needs a backstop from the government. Jensen Huang says that China's going to overtake the U.S. in terms of AI. And I'm like, man, we got this bubble here in this AI where I have kind of been a believer for a while that the degree of capex is not going to come back to these companies in the form of revenue. And those headlines hitting, like, I kind of really want to be pressing the bear side of this market, like, really, really hard right now. And, I am still pretty much like 100% short at this point. But I'm also just respecting that seasonality is seasonality for a reason. it's market dynamics, it's forced fund flows, and my thought process on that being a negative headline from Jensen Huang and the wealth effect and OpenAI and all that stuff. Well, Apple's, you know, the investment bank that manages Apple's corporate buyback, when they're coming in on the bid, which they're probably buying now because we're more than 2 days past Apple's earnings report, they don't care about any of that. It's just that, you know, it's the company's mandate that they want to be buying back some of their stock. And obviously, you know, you could talk about Warren Buffett continuing to go to cash as well at the same time and shoring up more and more and more cash. It, like, all this stuff makes me really want to be bearish. You see it in crypto. The crypto had a little bit of a bounce back today. Yeah, I mean, we still can't break any support levels. So, I don't know. That's pretty much all I got. NVIDIA closed really weak on some of those headlines today, too. Really weak. But it didn't seem to overly impact the NASDAQ. They just found a new place to rotate to. So, you know, that's pretty much it. You know, no major technical updates from this market. I think that we are, for the most part, in the exact same spot that we were in yesterday, with the exception of we've satisfied a little bit of the oversold nature of the IWM and probably some of that shorter-term composite, which actually I think could enable the market to be able to move down because you don't have that, you know, oversold aspect of this segment anymore. But besides that, I don't think there's any actual new index level updates because we're still in the same range more or less that we were in yesterday. We're still battling that 674 area. And I guess if I was going to try to draw one lesson for the team on today's trading session, it would be the importance of knowing when you don't have as strong of an advantage. And when you don't have as strong of an advantage, trade less and trade smaller. And that's where my head was at today. I just came into today's trading session. I looked at our flat open. I looked at how much we had bounced back from, you know, the lows in the futures overnight to where we were, but that we're still back over support. And I was like, I just don't have the conviction right here to be able to say that we're going to today be able to immediately break through 674 support and continue down, or this is the end of the dip and we're going to get back above 680 and everything is going to look super bullish again. I just didn't have that conviction. So I don't have the conviction. I take my foot off the gas pedal. Less is more approach. Anything that I did that was like a newer day trade today, I did with very small size. You know, the call outs I had were all relatively low conviction call outs, and that's fine. You know, knowing when to trade is as important as anything else. And we had a couple decent short calls today at the index level. Not a lot of them, but a couple, like, you know, shorting off this like 1040, 1045, like double tail here. Got a little bit of a pullback on that. It didn't give any follow through. And then I think we called out the high of the day again today in the SPYs for a pullback. And it did break that high? What was that high? 86 cents. What was this high? Wow. Held it to the penny. Held it to the penny on that bounce back. So we called out the short here and did nothing all day. But you just got to be patient, you know. If you shorted here and you got your risk covered, because I remember calling out, if you took the short, get your risk covered here into 680, plus a little bit more than that. And then if you took the trade, you got your risk covered, you got a little bit more than your risk covered, you just leave your stop in, you get stopped out, so what? It does nothing, so what? I think that sometimes traders go a little bit crazy if they've got a position on, and they get stuck in basically what the market did between 12.50 and 3.15, where they just start doing stuff because the trade's on. So they just start doing stuff like shorting more or covering more or whatever. You should be doing nothing. If you put the short on and you got your risk covered and you cover a little bit more and you got your stop there and the market then just goes sideways in an extremely tight range for 2.5 hours, you should be doing nothing. Your stop should be there. If you've got more take profit bids out lower for if the market were to break lower, you're just leaving them there and you're just not doing anything. You have a game plan in place. You let the game plan play out, and sometimes when you're letting the game plan play out and the market's going sideways, it just literally means you do nothing. And you just sit on your hands and you kind of wait. Don't force stuff if you're already in those trades. Don't talk yourself out of the trade. Don't talk yourself out of taking off extra stock. Just follow the game plan that you originally created for yourself. And I think if you did that, we had like a couple okay trades, and that was it. There just was not a lot of conviction there. Oh, and then we called the short out into the close, actually. I think at 3:15. I saw the cues starting to pull a little bit here at 3:15. There was a low conviction short call out. I think Rock and I were involved in that one together. I didn't have strong conviction that we would roll down into the close, though I thought it was a possibility. It looked like maybe we were pulling in a little bit, and I was like, all right, maybe you can short a little bit real tight versus the high of this candle, within this candle, and if we roll down, it can be an okay trade. And that's pretty much what happened. So, low conviction day, few okay day trades, no real major market updates. I didn't really do too much from a new stock perspective or whatever. Didn't have too much on my list either this morning, except Lemonade Long. I don't know if anybody caught that, but Lemonade was massive today. And Google Long, which Google held in great into the close. This is still one of the best ones, I think, to be long in the Mag 7 complex. Great pullback to this ADMA. Nice looking pivot into this 275 pre-market, into that ADMA, and turning back up and closing strong. So Google still looks great. But yeah, that's really all I got. So not a whole lot, not a lot to talk about, but I'm happy to answer any questions. From Eli, how do you like to reset if you feel off from a more difficult trading session? Good question. So I'm trying to understand the language of your question, because the way that the question is worded, it implies, like, for example, yesterday I had a tougher day, and now today I'm just like feeling a little bit off because of yesterday's session, or for whatever reason today I'm feeling a little bit more off. That's kind of what it sounds like. I think that the first thing that you need to do is kind of recognize that. If you guys remember, for myself this morning, for whatever reason, I felt very off this morning, and I apologized like a couple times on the VTF, because I just felt like I wasn't on point. I wasn't keeping up with my positions very well. Like I had I had a little bit of a late night. I had a very slow morning. I was trying to manage Solar Edge on earnings. It was all over the place. I had to make it to the office, which I hate coming to this freaking office in Manhattan. I had to make it to the office this morning while my positions were moving. I raced down here as fast as I could. And honestly, I was here like doing the morning meeting and trading the open, and I didn't feel right. Like I was struggling to follow along with the market. I felt super lightheaded, which is pretty unlike me if you know me pretty well. I'm usually pretty good at kind of pushing through stuff like that. But I was like trying to keep up with my positions, trying to communicate on the radio and the VTF off the open, and just kind of feeling lightheaded and not feeling like I was doing anything right. And I think that what you have to be able to do, and I did this morning, was just recognize it. I recognized that I was feeling off, and I wasn't in tune with the market, and it just becomes an additional reason to take a less is more approach. You gotta know yourself, and if for some reason you're feeling off, you shouldn't be pushing things, because you're just gonna hurt yourself. And if you push things when you're already feeling off and you hurt yourself, that just is gonna create a really bad like feedback loop of feeling worse and getting angry and getting frustrated and having more mistakes and everything else. So, I would say that the first thing is to recognize it. If you know you're feeling off for whatever reason, have a less is more approach. And then the final thing is you need to be able to work on refocusing to do the right things going forward. And for me, that's where I just really go back to the game plans, right? Go back to a belief in the game plans. And even this morning, it's like I'm trying to manage 15 swing positions. 2 of them are moving pretty rapidly on earnings, and everything else, some of these are some pretty aggressive names that I'm trading right now, and I wasn't feeling right. I was like, all right, but I know what my game plan is. So I hit a point, and this is probably why I wasn't doing a great job communicating on the radio at a certain point this morning. I hit a point where I was like, I don't care what the market does right now. I don't care what the setup is on this market. I just need to focus on the fact that I've got game plans for current trades that are open, and then follow make sure that I'm following the game plan. So that's kind of what I just decided to 100% focus on. Was like, all right, like I can't overly focus on the 20 things at once that I'm usually doing between looking for new trades, communicating with the virtual trading floor, and managing the open positions that I have. I'm just going to focus on making sure that I at least follow the game plans correctly on the open positions that I have. And then when things calm down a little bit, when those positions slow down, maybe I can start to incorporate the VTF a little bit more and incorporate some new call outs for the room a little bit more. So recognize it and focus on your game plans. Your game plans need to be like the thing that you can always trust and that you can always believe in, because it's good game plans that create the consistency like we always talk about. So build out those game plans and just follow them to the letter of the law. And when nothing else is working right, lean on those and rebuild and do the right things. So I hope that helps. From Liam, if we got to an area where you wanted to be long the market or a name, or short, for instance, just roles reversed, would you be long or short the name and then trade the leveraged ETF version to kind of manage the position? If we got to an area where you want to be long the market or a name, or short, for instance, just for roles reversed, I'm not sure I fully understand the question. Would you be long or short the name? I'm not sure if you're asking me like as like a hedge, like if I'm long a stock, I could be short the levered ETF, or if I'm long a stock, I could be short an index level levered ETF to hedge the market. I'm not sure if you're asking me that, or if you're asking me when you see a trade and you want to go long or short, just how about just buying the leverage ETF as opposed to buying the actual stocks? Maybe you could clarify the question a little bit further, so I understand it a little bit more, and I'll be happy to answer it. So go for that. While you're doing that, I'll look at TT's question here. Or a great one. I have a hard time coming down. I have a hard time coming down after a really good day. Very amped. Yeah. So TT's question's a solid one here. Eli's question was more on like if you had a tough day, how do you reset for the next trading session? TT's question is something that I've actually had more struggles with personally, which is when you have a really good session, how do you not have that impact you the next day? And I think that this also comes down to knowing your trader personality. The type of person that I am as a trader, I've actually always been better at making comebacks than I have kind of reaching new pinnacles in my trading career. For instance, like if I have a drawdown in my account, or if I have a period of weaker P&L, I've always been better at coming back, making the comeback, than I have when like, all right, things are going really well and I want to take everything to the next level and get to that next peak. I've actually always been better at the comebacks than the next level. There was a saying, there's a like a very common phenomenon in trading that was another thing that I just didn't believe when I was a new trader until I saw it happen over and over and over and over again for people, which is that after you have your best day, you have your worst day. But I've seen it happen so many times that I know that phenomenon is a very real thing. And it's because we get what we on the team here sometimes refer to as profit drunk. and that's what I've struggled with more, where it's like your confidence gets so high, you feel like you're the man, you feel like you're Midas, everything you touch turns to gold, and the next thing you know, you're just getting a little bit looser with your decision making because you're so used to things working out, where it's like, I'm just gonna take this trade, it's not as good, but it's a B- trade, but I'm gonna take you with A level risk because everything has been working out so well for me. I've definitely made that mistake before, and and that's a tough one. But my answer to that is kind of the same answer. It's leaning on your game plans, right? Because preset game plans, good preset game plans, are not going to take into account how yesterday's trading session went. Preset game plans are consistent. and they're the root of consistent profitability. So it doesn't matter if I had a bad day or a good day yesterday. I have game plans that are consistent based on the trades that I take, the amount of risk that I'm supposed to take, all this stuff, and then I execute that, and I just follow the game plan. I lean on that game plan to really make sure that I can be consistent regardless of whether yesterday was a really good day or yesterday was a really bad day. Appreciate the question there, TT. Seeing a question coming in from Robert, but let me just do Liam because let's see what his qualifying question is. Do you prefer to be long the leverage ETF or the actual name? If you were long the name from a good spot but maybe saw a good intraday short, how do you handle that? You could be bigger picture, be long a name from a good location but still want to day trade it. Yes, this is a great question. I guess how would you handle that? Would you want to be bigger picture? Yeah, okay, I understand the question now. So first of all, the first part of the question is pretty simple. Do you prefer to be long the stock or do you prefer to trade the leverage ETF? I'm going to say it depends. As a general rule, I prefer to be long the stock because the leverage ETF, you're just dealing with decay, and I don't like to deal with decay. The exception to that rule is related to pricing. I don't like to trade things that are high priced as a general rule. I don't love trading things that are over $250. I don't love wider spreads. I don't love the less liquidity that comes with a more expensive name. So, for example, and also just because even though we get so much BP at T3, so much buying power, the amount of buying power that you have to use to be able to buy QQQ versus TQQQ is massive. So I just generally prefer to be able to trade the underlying stock unless it's something that's really expensive. So that's why you see me trade TQQQ all the time and not QQQ all the time, because it's $100 and it's not $600. So, but otherwise, I prefer the actual stock. And then for the second part of your question, what you described makes perfect sense, and I do that once in a while. If I'm long a swing and I want to be short that same name, I'm long the swing, I don't want to get out of it because it's a bigger picture trade, but I see that this thing just got really extended, it's probably going to pull back, there's a day trade here, upside shooting star, day trade, I'm not going to liquidate my long, then I might switch over to a leverage ETF to put that actual trade on. So I do that. Every once in a while you'll see me kind of long and short the stock at the same time, but they're completely different trades and completely different time frames. Yeah, Google can be an example, sure. Rock says I try to look at my week P&L, month P&L, year P&L to keep myself in check day by day to give me some context. That's good advice too. From Robert. What's up, Robert? I can recognize myself when I am not mentally ready for a day, even that I want to trade, and after taking 1-2 bad trades, I start going absolutely crazy, and because I feel mentally weak for a day, I let myself gamble and take random trades. Best thing for me is to stay away for the entire day, but I want to work on my mental side, that I flip my mind into focus mode. Any comments would help. Yeah, I definitely get where you're coming from, and I think I kind of described that myself just a moment ago on maybe Eli's question, and I described it the way I described it. I did that from personal experience. I've been in the mental state where you feel off for whatever reason. Like I did this morning. Like I said, I had a later night last night than I should have, and probably didn't sleep as well as I should have, and just felt really off and didn't get my research done properly, all this stuff. And I've had that experience where I've done this, where it feeds on itself in a very negative way. I already feel off, so then I'm lazy with my trades. I take losses on those bad, lazy trades. Then I get angry, I get frustrated, I yell, I break stuff. I've done all that. It's not a good place to be. So, I don't necessarily think, at least for me, that I'm going to step away for an entire day. But you can work on your mental game, but I think that working on your mental game literally means that you are recognizing that you have off days and that you should just trade less on those off days. Doesn't mean don't trade at all. And I do think that if you've got open positions, you're required to manage those positions, which requires you to be in front of the screen. But just recognize, like, hey, today is not my day, and I'm not going to be, or at least tighten your risk parameters. Give yourself a tighter limit down for the day. Take less risk per trade, stuff like that. Or even like I did today. I didn't really take anything like new. Like I took a couple extra trades within trades that I was already in, and that was it. And I kept them all really small and really tight, and they actually primarily worked out. But it was very, very selective and pretty small on what I did, and that's fine. I think that was 100% the right thing to do given where my head was at. So I hope that helps, Mr. Robert. Over into the YouTube, views on Spotify, AMD, and ALAP from Apex Joy. Sure, let's take a look. Yeah, the Spotify earnings report, was that yesterday? I thought that was a good report, but they sold it down. I liked the report. I like Spotify. I don't look at the name too much anymore just because it's so expensive and everything else, but I've generally liked how this company has progressed. But the chart does not look good. We have to recognize that. I think in order for the chart to look good, it's got to get back above 675. So I don't want to be long this name right now. I want to be long either because it's getting above 675, so it's beginning to improve, or because it's hit a point here where it's become really extended and a discount, and I want to take a look at putting on a bigger picture trade for that. So Spotify, AMD, held in incredibly well. The AMD report after hours, we talked about it in real time. I thought it was an excellent report, but it's been kind of commonplace in this earnings season for stocks to not perform well on excellent reports. So I wasn't surprised to see it sell down. And what I said in the morning meeting today about AMD, which I still stand by, was I don't have conviction in this, guys and gals. I don't have conviction in AMD because it was a great report, but the stock is negative because it's up massive. It's up massive into this report. So it just is really tricky because they could easily sell this thing down on that good report. I did say, maybe you could look for a long, I think until like 236, 237. Might have gotten there pre-market. It did not go there during the day. So I didn't do anything about it. But honestly, it held in great. Held in great, closed great, and looks great. So I think that AMD is a name that you can be long as long as it does not lose basically today's low. If it loses today's low, something's wrong. Take a step back for the name. And then finally, ALAB. I don't really look at this one as much, so I don't have as strong of feedback probably as AMD. Very quickly here, I see a head and shoulders pattern though. Shoulder, head, shoulder, neck, like a vertical upward neckline here that broke back here. They're kind of retesting it around this like 190, 200. So this is a bearish pattern. If it can really get back above 210, it's probably negated it. But while you have this head and shoulders, it's broken lower. I don't want to be long this stock here. The measured move on that's probably like $65. It almost got there, I guess, actually. 145, I think, would have been the measured move. It almost got there, so maybe it fulfilled it and it's bouncing back already. But honestly, it looks a little bit sloppy to me. And it does not look like something I would want to be long unless it can get back above 210. From David, last week you said you were 4/5 short. How short are you now? He just, oh man. I don't know. I'm probably after yesterday at like 50%, something like that. I want to be heavier, to be honest. I really want to be heavier, and I'm holding myself back because of the bullish seasonality that we discussed, and because we're above 674. If we can lose that 674, like I'll add some on the way back up. I'll also look to add if it looks like things are breaking down through 674. But this is the area where I want to have a little bit less exposure. And, while I said I'm not ready to come in and buy the dip for new longs into 674, I want deeper. I am covering shorts, though. So you know, we'll see how that progresses. Whew. Yeah, dash no good here after hours, below 200, off 19%. Economy's not doing well for the regular folks. I don't know what the solution is either. It's concerning, some of this AI stuff that's happening and how it's going to impact jobs. I really don't know what the solution is. All right, I'm going to end it there. I wish because I was going home to get some rest, but I got to go meet up with somebody. So I'm going to jump. Have a great night, everybody. I'll see you all tomorrow.